Welcome to Geopolitics Universe. In today's video I will be discussing and explaining the new financial alliance between Russia and China and the way they are crushing the US economy. But first, I would just like to welcome you to Geopolitics Universe. This is a channel where we share the latest news, rumors, and insights into all things on geopolitics. You'll be able to find news surrounding all things to do with geopolitics. I would really appreciate it if you could please like and subscribe. Also, I just wanted to announce, as we are a new channel which is growing by the day, we will be launching a giveaway for a $50 Amazon gift card. All you have to do to enter is like and subscribe. The giveaway winner will be announced in due course. Now let's carry on with the video. The share of trade operations between Russia and China using the US dollar fell to 46% in the first quarter of 2020, while holding at 90% only 5 years ago. The De-Dollarization initiative in Russia began in 2014, during sanctions amid a diplomatic breakdown over Crimea. One of the measures adopted by the United States was to repeatedly ban Russia's use of the dollar. Given that the American currency is the most used in international trade, with even payments in local currencies often converted to their US equivalent, being a slave to the dollar would precipitate a breakdown in nearly all Russian trade. Other countries have also joined in the initiative, among them notably China, Turkey, Iran, India and Brazil. In spite of the move to de-dollarization, the supremacy of the US dollar in the majority of transactions globally is obvious, which is to say that the de-dollarization process might take some time, says Ekaterina Novikova, Associate Professor of Economic Theory at Plekhanov University. Russia doesn't trade much with the US, for the most part selling its goods to China and the European Union. To a certain extent, the de-dollarization of the Russian economy is an inevitable process, considering a particularly mild exchange of goods between the two countries, compared to China and the EU, as well as ongoing geopolitical processes, says Alexander Abramov, a financial analyst at the Russian Presidential Academy of National Economy and Public Administration. However, the volatility, i.e. instability, of the ruble also makes it weaker than the euro and the yuan, which leads to a lower number of ruble transactions with Russia's key economic partners. For example, the ruble accounts for only 7% of all trade with China. Using strictly rubles for calculations is impossible today, owing to the ruble's high volatility, while using derivatives requires making changes to Russian law. It's, therefore, impossible to sign long-term contracts. For instance, the agreement for the delivery of Russian gas to China using the Sila-Sibiri pipeline is to last for a period of 30 years. In view of the International Division of Labor, all calculations must be tied to some equivalent. The question is, if not the dollar, then what? The euro is the first currency that comes to mind when talking about international transactions. It's already being used by Russia's largest oil producer, state-owned, Rosneft. There's little chance of anyone successfully dethroning the dollar in the near future, but this isn't stopping countries from swapping it for their own currencies, even in international deals. In 2019, Russia and China signed a treaty to use national currencies in mutual trading. This added to the gradual reduction in the dollar's traffic, from 90% in 2015 to only 46% so far in 2020. International banking reserve structures are more than 60% dollar-based. The dollar still holds the top position in international trade, says Dmitry Bykov, head analyst at Rus Invest. More than 60% of Russian exports, and a third of the imports, use the dollar. Oil and gas contracts are also done using the currency. And a fifth of all bank deposits carried out in Russia are done using the dollar as well, although that trend has been declining since the start of 2020. Nevertheless, the Russian central bank has been consistently reducing the US dollar share in its reserves. In April 2018, following the new round of stringent US sanctions, Russia expedited the withdrawal of its reserves out of US government bonds. Russian investments into them fell by half, from $96.1 billion to $48.7 billion in May, and then once more, to $14.9 billion. For comparison, in February 2013, during a peak period, and before the reunification with Crimea, Russian investments in US bonds totaled $164.3 billion. Using the US dollar in trade with Europe is a remnant of a past, when the euro simply did not exist. A number of national European currencies, aside from Germany's, were neither highly reliable nor possessed the necessary levels of liquidity. Using the dollar used to make basic sense. However, the situation has since changed. The Russian government declared in October 2018 that it was actively working to reduce economic dependence on the dollar, sometimes by stimulating transactions in national currencies. Russia and the EU both intend to move away from the dollar, due to trade disagreements with the US, the Ministry of Finance then claimed. A working group will be formed to assess the switch to national currencies in the near future. Moreover, discussion regarding US sanctions against the Nord Stream 2 pipeline project between Russia and Germany seems to only add to the need for such an initiative. For the first time in recent history, US sanctions could be leveled at a Western partner, Germany. Switching to a free-floating ruble in 2014 proved effective in increasing the stability and forecastability of the currency. When the measure was adopted that year, the ruble depreciated almost twofold, but it quickly came back and was trading without the central bank's involvement. Whatever strategies Russia takes to limit the severity of the fallouts from the ruble's devaluation, this can only truly be done with a restructuring of the Russian economy itself. Meanwhile, the rublization of transactions with China and the Eurasian Economic Union (EAEU) countries looks quite promising. Russia doesn't enjoy a similar relationship with the EU, as the price of Russia's exported goods is still tied to the dollar. However, the use of the ruble with India has in the past year alone doubled to become 77.8% of all transactions. The same time in 2019 saw just 34.8%. The Russian government insists that the BRICS countries' move to using national currencies for mutual trading could also reduce dependency on US politics. India is merely one example of this. Thanks so much for watching till the end. Please like, comment and subscribe and turn the notification bell on so you never miss a video. I would really appreciate it if you do this, as it really helps support the channel. On this channel we share the latest news, rumors, and insights into all things on geopolitics. You'll be able to find news surrounding all things to do with geopolitics around the world and more. Until next time, see you later.